Good morning, Paul Georgia from Allendale. It's November 5th, Tuesday morning. Grain markets are quiet. We got corn slightly lower, beans a little higher, wheat up just slightly as we talk here this morning. But the fundamental news is hard to come by here. It's a lot of talking about what we have been for the last several days. We've got the USDA supply-demand report coming out on Friday morning at 11 o'clock. Trade is focusing on that, waiting and wondering what kind of adjustments will be made. Traders' attitude going into that is that it likely will be bearish corn. It's hard to find reasons why not, with the yield results of producers telling us that in many cases 30, 40 bushel an acre more across the eastern part of the corn belt. Trade also doing their balance sheets, expecting that demand maybe increase a little bit, but the bottom line, ending stocks will more than likely increase, and we could see ending stocks in corn above 2 billion bushel. In the soybean complex, I think we've got a much more exciting potential on this report. We've got the expecting yield to increase. We're expecting also demand to increase. Our export sales right now are already 1.2 billion bushel out of a USDA's estimate or projection of 1.4 billion bushel. So that leaves only 200 million bushel of soybeans to be sold during the next 10 months of this marketing year. And the lowest number that we've ever sold in this next 10 months is about 400 million. So expecting some increases in demand, in usage, and exports that could provide still some tighter ending stocks than what some are thinking. The trade right now is looking for about 175 to 180 million bushel ending stocks on soybeans going into this report. Other news, harvest progress in the U.S., 73% complete on corn, 86% complete on soybeans. That now is above the 5-year average. Wheat conditions, 63% good to excellent, compared to 39% good to excellent last year. And last year we were trending lower. This year we're trending higher as far as the improvement in winter wheat conditions. Another factor that we may have to deal with here before the USDA report comes out is the rolling of index funds, where currently Deutsche Bank is rolling out of their long December contracts and going to the December contracts of 14. So we're seeing some movement in spreads there. Also, starting Thursday is the well-known Goldman roll, where they will roll from December 13 corn into March 14 corn. So they'll be buying March, selling December corn here in the nearby contract. So we'll be watching that, and that could cause some volatility in ahead of this USDA report on Friday. The livestock news, cutout values there were better yesterday. We've seen choice up 96 in the beef, select up 29. Pork cutout values were up 87 cents. We're seeing some tightness in the hog slaughter, or reasons for the hog slaughter and meat prices to be strong is that looking at sow slaughter, it's down 7% from a year ago, suggesting that the hog producers are building herds, and we could see the effects of that down the road. In the livestock, carcass weights are less than they were a year ago, and part of this could be because of the Zilmax taking off the market, and since that time, the last 4 weeks, we've seen weights under a year ago levels. We're also looking at tighter fed cattle supplies as we move forward here into the end of the year. We'll be watching that closely, and could impact and drive these futures of the December and February and April contract even higher. So we're watching that very closely. Reason to stay in touch with Allendale's research. You can reach us at 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you tomorrow morning. Thank you.